Let's move on to Sathiya Varqa. That's truly 360 degrees. Sathiya is owner and co-founder of Palm Oil Analytics, an online publisher of palm oil daily news, price data analysis based in Singapore, serving global commodity market. Dr. Sathiya has been in the commodity information business for over 20 years. With over 30 years experience, he's a regular speaker in many global forums. We have kept him at the end so that all of you can stay till the end to listen to the complexities of the palm complex. The complexities of the palm complex. I think the palm world will be happy to know that there are that many sympathizers or many people who, I think Swamiji talked about palm, the government talked about palm, we all like palm. I think it's important. It did go down a little bit in the lockdown period, but while it does, I have a feeling that the entire Horeca that Shiv Kumar was talking about has actually gone zero pipeline, zero stock pipeline. So I think in the last 30 days, what we saw was gradual opening up, not with reference to India, but many markets. So palm is back, and in old adage, when Indian duties used to be 0 to 125%, we had a old adage saying, if India sneezes, palm catches cold. Those days, Indian import duties were truly havoc. And eventually, we have to work towards a more transparent duty structure, along with the slab systems like in Indonesia and with Malaysia do. For your imports, you got a tough job. One hand, Sathiya. Mr. Varqa, please go ahead.
Okay, thank you. You can hear me now. So yes. let me share the slides. Share the slides. Can you see my slides?
Yeah.
Okay, excellent. Can you hear me clearly?
Yes.
Okay, very good. Let me just remove all these cables. So, good evening, everybody from Singapore. Thanks very much for having me. It's very short presentation. So we started the year in 2020 with very high expectations. So it's no exaggeration to say that not just in palm oil, but also across the sectors from trade from US-China trade improvement to expectations on increase in global growth and so on. But by just 4 months, Jan, Feb, March, April, all the outlooks have turned dismal. So if there is one way to say what happened in the last 4 months, it was from very high expectation to very dismal outlook. So the United States and China signed an agreement way back in February with the United States, China committing to buying $200 billion worth of goods and services from China. From the US, China promising to buy from the United States worth $200 billion under the phase one. That now looks very uncertain given the situation of China, Hong Kong, and the US. So in that commitment, there was also $32 billion that China promised to buy from the United States. So that outlook is uncertain right now. Although United States shipment of soya beans to China has doubled from September, when the marketing year started, to end of the week 14th of May. It's doubled, but it's still lower by 52% compared to 2018, prior to the start of the tariff war. There was high expectations on Summer Olympics starting in Tokyo, but that's now been firmly postponed. IMF slashed their global growth to -3% for the full year 2020 from the initial projection of 3.3% in early 2020. Many presenters last year.
Can you move the slides, please?
I'm still on this 2020 so far. Can you see that?
Okay.
Okay. Yeah. So many presenters were very optimistic about palm sector, mainly on the idea of lower production and higher consumption from the biodiesel segment as Indonesia committed to implementing B30 and Malaysia committing to B20. I want to just stress that these plans so far, as we know, are delayed in Malaysia and disrupted in Indonesia. So they are not completely destroyed. It is true that biodiesel demand is mainly because of government policy. Government policy creates this demand. But with the massive spread in POGO, where CPO is a lot more expensive than gas oil, it is expensive to subsidize. So Indonesia is working on changing the levy structure. Malaysia has so far delayed, but there are some other problems. So I just want to stress that it's not completely destroyed. Globalization will not be rolled back, but it will have less of Chinese characteristics as firms around the world reconfigure their supply chains. And it shouldn't be surprised that most economies will now begin to pursue protectionist measures in not all sectors, but in some selected sectors like food, medical, and technology are the obvious ones. That's very visible when Vietnam stopped exporting rice to Malaysia, and Malaysia has to turn to India to import rice as a commodity. And subsequently, Cambodia and Myanmar stopped exporting rice in order to secure their domestic supplies. Okay, now I've changed the slide. So given that situation, what are the main factors to watch out in the next few months from June to December within the palm sector? So in palm, the main things we have to look out is the coronavirus uncertainty and fragility. The easing of the economies in Europe and in China has helped CPO prices to rise by 14%. However, no one can guarantee that these easing will not be rolled back. So there may be some economies that will reinstate the lockdown. And if that happens, we can easily lose about 100 points on the CPO futures market. 100 points meaning 100 ringgit. Okay. Production is still low, although we saw very good production trend in the first 3 months in Malaysia and Indonesia. Production is still trending 17% lower in Malaysia from January to April 2020 versus January to April last year. In Indonesia, production is down 14%. So production is low. In Malaysia, exports are also low. Exports are down about 25% from January to April 2020 versus January to April 2019. So production outlook is low, both in Malaysia and Indonesia, because we saw good production, but that's no guarantee that we will continue to see good production. Malaysia will see good production in May again, when we see the estimate numbers that will come out next week, and market may have a little correction when these numbers come out. But outlook for the year is Malaysia will see lower production numbers. I will show that in the last slide. Biodiesel is going to resume in Malaysia, as the government has already stated last week or the week before. The timetable has changed. The national implementation.
Can you move the slides, please?
I have not moved. This is still on the main factors to watch out.
Okay.
Okay. So again, no.
Satya, we are seeing
Sorry.
the Excel file, not the PowerPoint.
Oh,
Probably
you're
you need
seeing
to change
Excel
the
file?
screen. Yeah,
Oh,
you need to
sorry.
change the screen.
Okay. So that's a wrong one. Stop sharing. Now let me see. Okay, so this is a bit more complicated, huh? Can you see now?
Yeah.
Can you see now?
Better. Yes.
Main
Yes,
factors to
yes,
watch
yes,
out.
yes,
Oh,
yes.
okay.
Yeah.
So this was my first slide. This is my second slide. Okay. You can see now main factors to watch out.
Yep.
So I was speaking on point number 3. So Malaysia should still see the resumption according to the government commitment, but we have not heard any clarity on how the government of Malaysia is going to fund the biodiesel program, because the spread between CPO to gas is so vast. It's more than $220. So CPO is cheaper, gas oil is more expensive. CPO is more expensive, and gas oil is cheaper. So in order to entice biodiesel refiners, the government has to pay subsidy in order to fulfill the biodiesel blending targets. So that part is not clear yet. Indonesia recently announced increase in the levy, CPO export levy, by $5 to $55, and they made it clear that the extra funding will be used to fund the implementation of B30 biodiesel program. So that means the Indonesian biodiesel consumption target will remain at 9.60 million kiloliters. So that changed here. Okay. And the Indonesian government also clarified that they will be drawing from the national budget in order to fund the B30 program. So Indonesia biodiesel commitment appears to be very strong and committed. Malaysia seemed to be committed too, with the adjustment in the timetable to restart from September 2020. But the funding part is still not clear. Indonesia and Malaysia have been having a very warming ties. So this is reflected in the increased exports of Malaysian palm oil exports to India in May. So we will see a big jump in Malaysian exports going to India in the month of May, and that's been supporting the CPO futures too in the last 2 weeks. Fifth point, Indonesia and Malaysia will go into a price war in the next few months as Malaysia reduces the CPO export tax to 0% from currently 4.5%, 0% on CPO exports in June, while at the same time Indonesia will increase the levy by $5 to $55 on CPO. That means Malaysian CPO exports will enjoy a price discount. Malaysian CPO will be cheaper than Indonesia by $10 to $15 if you keep the exchange rate where it is right now. Okay, so that's really good for Malaysia in the short term. However, if Indonesia decides to scrap the levy or reduce the levy, then the dynamics will change. And it's also the same if Malaysia decides to increase the export tax even by 4.5%. Indonesian CPO will suddenly become cheaper in the global market. Number 6, as I said at the very beginning, US-China is committed to the phase 1 trade deal, but that seems like that's not going to happen now, or it's still uncertain. That means China may not be pursuing the purchasing of soya beans from United States. China may turn to Brazil, but Brazil has other problem, particularly the severity of the pandemic has impacted many of these the agriculture sector. So not sure how China will depend on who they will depend for a reliable supply of soya beans. United States or Brazil, which means again China has a window to shift their edible oil purchase to palm oil from Malaysia and Indonesia. And Malaysia, given the lower prices, Malaysia may stand a good chance. So the conditions are right for huge surge for Malaysian exports in the coming few months, June, July, August. Oleochemicals, CPKO and CCNO. CPKO exports not been very high, but it's looking very promising, particularly to the EU, which is a regular market, but also to China. Given the uncertainty over the pandemic, there is a greater demand from consumers for personal care and home care products, which are manufactured using lauric's feedstock, which comes from CPKO and CCNO. CCNO, crude coconut oil price premium over CPKO is about $200. And I think the spread will narrow to about $150, but not lower than that, because there is a big problem with the biggest copra producer in the world, Philippines. The pandemic has really impacted collection of copra from the mountains to the mills. So CCNO prices been skyrocketing, and even today the CNO Rotterdam, CIF Rotterdam offer is $800 per ton for nearby months. Likewise for PKO is at $700 per ton for the nearby month. And last point, food price inflation. Global food prices have been falling in the last 3 successive months to April, but sunflower oil prices have been increasing. So if you take all the different commodity baskets, cereal, meat, dairy, veg oils, and within veg oil, all the prices are down except for sunflower oil, been rising in April, mainly because of the export restrictions imposed by big producers like Ukraine, so that they can secure their domestic supply. So that's the only oil that's been rising. The rest of the oils been falling. But I think in July, August, we may see increase in food prices, particularly in the vegetable oil sector, with the current shift of the current rise in pent-up demand from China and from India. Okay, last slide. Malaysian production down to 19 million tons from 19.85 last year. So production down about 4.3%. Indonesian production, I think, been mulling between steady to higher, but I think the production will be at about 45 million tons in 2020, unchanged. CPO futures are up 14% just in May. So May had a very good run, and but it's still 30% lower than the start of January. And prices can still go higher to 2,400 ringgit on the benchmark month, which is about $552 per ton. And that is if Malaysian exports are maintained in June and in July. And we have to see good flow of shipment going from Malaysia to India. And with the change in government in Malaysia, the political situation has changed, and hopefully India will remove the restrictions on refined palm oil and will not impose any new increases in tariffs or restrictions on crude or on refined. But August, September, October, we think prices will be lower as Malaysia enters peak production, which is August, September, October, and Indonesia enters peak production from September, October, November. Last point, Malaysian biodiesel B20 implementation commitment and the willingness is still there, but still doubtful on the funding. So I will not be surprised if the government delays the implementation once again, but we hope not. We hope the government will fulfill the implementation and see a nationwide adoption of B20, currently scheduled at June of 2021. Okay, that's all from me. Here are my contact details. Anything you want to ask, you can follow me on Twitter. I'm very active. I put a lot of charts, data, and so on. My email address is there, my WhatsApp, WeChat. Thank you very much.
Thank you. Thank you, Mr. Varqa. Very clear in terms of price projection and your thoughts on where the market is heading. Very good.